Hello and welcome to another session, Mortgage Market and Entities. There are various players who participate in the functioning of the mortgage banking. The two obvious players are the borrower and the lender. Traditionally, lenders have managed all the required functions of the prospecting a customer, providing the loan, servicing the loan, and managing the risk by themselves. However, as the market matured, the functions of the origination, servicing, risk management, and funding are unbundled and managed by different specialized entities. The mortgage market can be presented as follows. So, the mortgage market is consisting of borrower, originator, risk intermediators or risk intermediaries, settlement providers, servicer, and finally the investor. Who are originators? So basically, originators perform the role of accessing the prospect's credit worthiness and deciding on the best product to suit their needs and ability to pay. These are the entities that actually provide the mortgage loans. The borrower can directly contact an originator or go through an intermediary like a broker or a correspondent lender. Mortgage bankers sell all the loans they create in the secondary market because they do not have the long-term funding sources necessary to hold the mortgages permanently. A correspondent could be defined as entity that typically sells the mortgages it originates to other lenders. So the correspondent performs some or all of the loan processing functions such as taking the loan application, ordering the credit reports, appraisals, and title reports, and verifying the borrower's income and the employment. A mortgage broker, who is basically can be defined as a person or the entity who is specialized in the loan originations. By doing the loan origination, he would receive the commission to match the borrowers and the lenders. Who are portfolio lenders? So they include these commercial banks, savings and loan associations, and credit unions. They are also called portfolio lenders because they tend to originate loans for their own portfolio, usually adjustable rate loans like ARM, which we have discussed before, not for resale in the secondary market. Then what are the risk intermediaries? So risk intermediaries provide the insurance to make the loan process more viable. There are private insurance entities that provide the private mortgage insurance, which is called PMI, flood insurance, title insurance, hazard insurance, for example, etc. Some examples would include the private mortgage insurance, PMI. PMI is provided in cases where the borrower makes a low down payment. In this case, the norm of 80% of the loan to value LTV ratio is exceeded. The insurance is provided for the amount over and above the value that meets the LTV ratio of 80%. So LTV is loan to value. So if your loan to value ratio is more than 80%, then you would have to go for private mortgage insurance. The flood insurance is provided to protect against the losses due to floods. All right, so let's look into other couple of players. Like the FHA, VA, and RHS are the government-backed agencies that provide insurance in the mortgages. All right, so settlement service providers. What are the different type of settlement service providers? They actually provide various services required for underwriting and closing a loan. These services can include the credit reporting, property appraisals, and the loan closing. All right. Then what are the different settlement service providers? There are three different type of settlement service providers. First one is credit reporting agencies. These agencies undertake the credit check on the borrower's spending and the credit history. There are basically three big agencies. They are like Experian, Equifax, and the TransUnion, all with the national databases. Each credit reporting agency collects the information from the banks and finance companies, department stores, taxing authorities, landlords, and other credit guarantors, and keeps the information in the borrower's life. Okay, so what is the next settlement service provider? property appraisal agency. An appraisal of real estate is the valuation of the rights of the ownership. The appraisal does not create the value. The appraiser interprets the market to arrive at a value estimate. As the appraiser compiles the data, put it into a report, consideration must be given to the site and amenities as well as the physical condition of the property. Okay, so third settlement providers or settlement service providers are the loan closing agencies. These agencies are the party designated to conduct the loan closing and to ensure that mortgage or deed is recorded and the funds disbursed on time. The loan closing agent can be an escrow company or an attorney or a title company agent, depending on the region. It depends on state to state. The law, loan closing agencies might be different in Florida than the California. So loan servicing firms. So loan servicing firms provide the servicing of a loan, collecting the monthly payment, reporting to the investors, and handling the cases of delinquency. Some of the mortgage origination firms outsource the servicing function to focus on origination. Also, some firms purchase the loans, pools of loans after origination and manage the servicing function. All right. So, what are the primary servicer? Again, there will be different type of servicers, loan servicing firms. Among them, primary servicer. What is primary servicer? So, primary servicer basically he ensures that the cash flows reach their appropriate destination in a timely manner. The primary servicer is also responsible for the escrow administration and for the investor reporting. The services can be different types based on their roles and responsibilities. Sometimes these functions are referred to as special servicer who excels at dealing with the problem of the loans. All right, so who is a master servicer? So master servicer is responsible for protecting the interest of the investors by overseeing the actions of the primary servicers and any others involved in the issue, and by ensuring timely remittance of the the funds. Okay, so what are the special services? Special services are responsible for working the more difficult, often non-performing loans, first payment delinquencies, and or handling the real estate wound process. Who is a sub-servicer? These participants perform much of the primary services role on a fee basis but do not actually own the servicing rights. All right, so the secondary market. What is the secondary market? Secondary market consists of government sponsored entities, private investors, banks, financial institutions, insurance companies, pension funds, and the mortgages investment trust that buy and sell the mortgages as an income stream for their portfolios. What are the players in securitization process? Basically, the securitization process which will happen in the secondary market, who are basically the players in the securitization process? First one is issuer. So who are the issuers? These are the entity that pools the loans in the preparation for structuring their cash flows onto securities to a special purpose vehicle which is called as SPV. We are going to discuss about this in detail in the respective modules. SPV, special purpose vehicles. So they use the funds raised by issuing the debt securities to fund the purchase. In order to avoid the double taxation, the special purpose vehicles is typically structured as a trust, and in the case of residential mortgages takes a specific form of a real estate mortgage investment conduit, which is also called as REMIC. Investment banker. Once the pool is assembled and due diligence is performed on the loans, preparations are made to transfer them to a special purpose vehicles. This may be done by the issuer in the house or with the assistance of a separate investment banking organization, which basically structures the cash flows into a securities with the characteristics designed to meet the market demand. The investment banker or the underwriter may also guarantee the sale of the securities. All right. Next participant in the secondary market is credit rating agencies. The level of credit enhancement is determined by the credit rating agencies like Fitch Ratings, Moody's, and the Standard & Poor's. These are the agencies basically perform the credit rating. These guys basically does the credit rating based on the collateral quality, servicer rating, issuer reputation for the due diligence, and other factors. So another player in the secondary market is investor. There are a variety of investor types, and there are likewise a variety of motivations for the investing in mortgage-backed securities, which are called as MBS, and the ABS, which is called as asset-backed securities. Often investors such as the pension funds and the insurance companies are seeking to generate the cash inflows to match their own prospective cash outflows. Others use mortgage securities to hedge other positions, especially around the interest rate risk. Others, such as the thrifts, may be looking for the assets more liquid than their investment alternative. All right. So next players in the secondary market is government sponsored entities, which are also called GSEs. The majority of the mortgage securities issued and guaranteed by an agency of the US government. The Government National Mortgage Association, GNMA, which is not currently existing, or by the government sponsored entities National Mortgage Association. There is another agency called Federal National Mortgage Association, which is called as Fannie Mae, and the Federal Home Loan Mortgage Corporation, Freddie Mac. So these organizations are federally chartered agencies that support the secondary mortgage market through the mortgage purchase and the securitization program. Fannie Mae and the Freddie Mac are the privately owned, government-sponsored agencies that act as the conduits purchasing the mortgage and selling the securities backed by the mortgages. So GNMA, which is not existing, was in contrast is a government-owned. It was government-owned and government-sponsored agency, and it was basically guaranteeing the loans which were originated by the FHA and HUD. Private conduits. Some private conduits, are institutions also package the loans and issue the securities. Private conduits buy non-conforming mortgages, which are basically jumbo loans and hybrid loans from multiple lenders, and basically which are risky loans. Okay, they buy from multiple lenders and package them into a sellable securities. Private conduits are highly capitalized and willing and able to take the risk. The existence of conduits allows small lenders to participate in the secondary mortgage market that might not be able to otherwise. Some of the popular private conduits are like SARES, RAC, GMAC, and MGIC. So this is all about the mortgage market entities and different players and participants in the mortgage banking market. I hope you enjoyed this session. That's all for this session, and I will see you in the next topic. Thank you.